For more exclusive content from CNBC Crypto Trader, hit the subscribe button now.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
China tightens its ban on cryptocurrency after reports that it was failing to stop crypto activity in the country. The SEC issues a new set of ETF denials, this time denying 9 ETF proposals. Days later, the SEC, in a surprise move, recalled the denials for an internal review. Bitmain discloses its Bitcoin cash holdings ahead of its IPO. Vitalik Buterin lambastes Dr. Craig Wright's proposal to fork Bitcoin Cash. Good evening, I'm Crypto Man Run, and this week's episode of Crypto Trader starts right now. In a surprise move, the Chinese government tightened its ban on cryptocurrencies this week after reports that it had failed to curb cryptocurrency trading. This after last year in September, the Chinese government banned cryptocurrency trading. In the latest move though, the ban has become much more strict, with the Chinese government threatening to block over 120 IP addresses that belong to exchanges. Not only that, they're also blocking any WeChat-related accounts that deal with cryptocurrencies and banning any crypto-related meetups or conferences. Our sources in China tell us that this move shows how desperate the government is to ban cryptocurrencies and just how little control they have over the industry. Later this year, Crypto Trader will be going into China and bringing you a full coverage of the underground crypto scene in China. In other big news, the SEC once again denied a series of Bitcoin ETFs. This time they denied 9 ETFs. Now, if you remember the last denial that the SEC did, they denied the Winklevoss ETF because they said there was too much manipulation in the underlying market, which was in this case the Bitcoin market. This time though, the ETFs were based on the futures market and not the underlying market. And the SEC ruled that the futures market was, quote, too small and insignificant, and the majority of the trading on Bitcoin takes place in the underlying market. Then, in an unprecedented move, the SEC recalled the denials and put a stay on them, effectively putting them under review by the commissioner. Commissioner Hester Peirce said yesterday that the SEC had the right to recall a decision made by their staff for review by the commissioners. It seems that the SEC is really adopting a strange and overly cautious approach when it comes to regulating the Bitcoin ETF, and that this approach is causing a lot of infighting inside the ETF. The news of the ETF rejections was expected by most traders and only caused the market to drop by 3%. And though this move was largely insignificant, it does confirm that we're still firmly in the bear market. Joining me tonight, I have a panel of crypto OGs, all who have been part of more than one bear market, to talk about the bear market and the denial of the ETF. I have the Bitcoin oracle, Vinny Lingham, joining me from San Francisco. I've got the founder of Shapeshift, Erik Voorhees, joining me from the United States. I've got Simon Dixon, CEO of Bank to the Future, Anthony Pompliano, all the way from the West Coast, and Tone Vays, the man who called Bitcoin to $1,300, joining me all the way from his suite in Las Vegas. Gentlemen, or shall I say OGs, good evening. Thank you for joining us on Crypto Trader. Simon, since you haven't been with us before, I'm going to give you the honors of going first. I asked Twitter who we should get on the show, and they were quite unanimous asking us to get Simon Dixon on the show. Who is Simon Dixon?
Well, I run banktothefuture.com. I spoke at the very first Bitcoin conference in the world and wrote the first published book that included Bitcoin, and have invested in about 100 different companies in the industry.
How much money have you invested in the space?
Well, through Bank to the Future, we've invested $600 million in funding rounds listed on the platform, all in crypto companies.
Simon, this is not the first bear market we've ever seen, but is this the worst bear market you've ever seen?
I don't think so. It is. We have seen bear markets like this. I've personally seen my $30 Bitcoin crash to $3, my $1,250 Bitcoin crash to $250, and now my $20,000 Bitcoins crash to $5,000. It does appear that we are in a very similar market to the 2014 post-Mt. Gox market, where all news was bad. A lot of time was spent on building. But we're definitely in, we've had an extended 7-month period, and it looks very similar to the last time we were here around about 2014.
Simon, the difference between the 2014 bear market and the 2018 bear market is that in 2014, the market was very small. It was made up of a bunch of technical people. In 2018, we roped in a whole lot of retail investors, and the ecosystem is much bigger. Do you think that we can get the retail investors back into crypto?
I think the retail investor always comes in cycles. It's about understanding the economics of Bitcoin. The economics of Bitcoin state that every 4 years, the number of Bitcoins created every 10 minutes halves, which means that in 2020, we have the halving, and we normally have the year before the halving, you start to see the run up where retail investors come along, and I'm sure we'll have institutional investors that miss the boat joining the race as well.
So Simon, can we expect more blood on the streets, or is the worst over?
I would think so. I think you just got to, take a little symmetrical chart of where we were last time. It took us about a year and a half until the positive news and the building actually started coming through. I think we're now 7 months into that, so we're just over halfway. I'd expect a flattening. I'm not sure exactly where the bottom is. I would have liked to have seen a really big crash, and then, the buying pressure come back in. But at the moment, I think we're just going to have a flat market. It's gradually getting lower until we reach the point where the day, it's the day while everyone's still saying that Bitcoin's a scam, Bitcoin's a Ponzi scheme and a currency for drug dealers, that's where it always creates an undervalued opportunity. And we're still in that phase right now. So it's once those phrases when you stop hearing those phrases, that's when you tend to see a turnaround for Bitcoin.
Now, Simon, it's not all about Bitcoin. You've got a whole lot of ICOs and altcoins that came on the market, and some of them are trading at 5% of the value they were issued at. Is this the end of the utility token?
I don't think so. I mean, this was all sparked off by a Bitcoin bear market plus regulatory uncertainty. And as regulators started to step in the States, it took a lot of it overseas. What we're seeing is a new cyclical trend. And that trend is that during times of bear markets, people sell their tokens and altcoins and flee to Bitcoin or Tether as a way to, or some kind of stable coin. Because it tends to crash at a higher rate than the stable coin or the Bitcoin. And then during bull markets, you'll probably see that trend reverse, where people will seek higher returns in more times of certainty, and therefore they'll sell their Bitcoin in order to accumulate more tokens and be more speculative with those funds. So we're just seeing the altcoins and ICOs and tokens crash or pump a lot harder than Bitcoin, which is the world reserve cryptocurrency of cryptocurrencies.
Next up, I'm looking at the Bitcoin oracle, Vinny Lingham. Vinny, the last time we spoke, you said something, and at the time I thought you were being overly bearish. You warned us that this bear market was going to go on and on and on. I remember I asked you what happens next, and you said it goes down and down for a long period of time with a whole lot of spikes along the way. Well, Vinny, has it been a long period of time? Is this the end of the bear market?
So, Ron, I think on balance, it may be the start of the bottoming out phase, right, of the bear market. The problem with this is it doesn't mean that the bottom is the way we see today in terms of price. It could be 50% down. It could be 20% down. It could be the bottom, right? 6,000 could be the bottom. I think it's probably a 50-50 chance that it's not the bottom and that we go down further and we have to test new lows, just because of the pure fundamentals around how crypto works and how Bitcoin and ETH are really the fiat gateways for a massive crypto economy. And so this is a huge thesis which I've had, and our fund, Multicoin Capital, we've played this out as well. We really don't think that the bottom is there yet. But if the market turns around, there's some catalyst for growth, maybe.
Vinny, could the market be going down because ICOs raised money in Bitcoin and ETH and they're now panic selling into the market?
So essentially what I'm saying is, if you look at how much money was raised through ETH and through Bitcoin, the headline numbers when ETH was at $1,400 isn't correct, right? So if you said at $1,400, oh, we've just raised $1 billion this month, well, at $250 or $300, that's been chopped significantly. So the runways of these companies, because even though from a journalistic perspective, it makes great headlines to throw out big numbers. It wasn't. They didn't raise US dollars, and so in crypto, for every dollar that someone's putting into crypto, there's a seller on the other side. And so every dollar that's needed by someone who's running a crypto company in order to pay salaries, to pay travel, to pay operation expenses, there needs to be a counterparty, a dollar buyer on the other end. And what happens is, if you do the mathematics behind this, it appears to be that there is somewhere in the region of $1 billion a month worth of crypto sales into fiat that needs fiat to get out of the system. So in other words, crypto companies, the crypto economy needs $1 billion a month just to keep going and to pay salaries, infrastructure, etc., to support the lives and operations of 50 to 100,000 people across 45,000 companies. And this is a real big concern. And to give you an example, in the previous bear market, the biggest source of price coming down really and pricing pressure was, first of all, crypto sales, second of all, miners. Right now, miners need to sell, just in Bitcoin alone, somewhere in the region of $200 million worth of Bitcoin a month, just to basically cover their costs. So you take the mining costs, and then you add the salaries and operations. Salaries and operations are 4 times what mining costs are in this current bear run.
So that means that just to stay where we are and to prevent a net outflow, we need to bring in $1.2 billion worth of new capital every single month. That sounds crazy.
That's absolutely correct. And this is why I'm bearish on the market currently, because unless institutional and retail demand can bring in over $1 billion a month worth of fiat into the crypto ecosystem, what happens is companies and projects have to sell more crypto in order to get the same amount of fiat out of the system. So now you have massive supply coming into the market. And so what happens with the crypto tokens is the reason the prices are going down is because the gateway isn't the tokens. The tokens don't have enough fiat pairs. So they have to go and swap tokens into into BTC or ETH and then into USD to get money out of the system.
Vinny, the Bitcoin maximalists have been saying that if you bought an altcoin, you effectively bought a shitcoin. And at the end of the whole revolution, there'll only be one chain that survives, and that's going to be the Bitcoin chain. Now, wearing your Civic shirt, do you see a world where only one chain survives, and that'll be the Bitcoin chain?
So I would say that rumors of the death of the utility token have been greatly exaggerated at this point. I think 95% of them are probably going to die, so that's fair. So 95% of these tokens out there are total crap. They're scams. The teams behind them don't know what they're doing. They're going to run out of money. And the bear markets are great. This crypto bear market is fantastic. It's going to wash out all the pretenders from the real builders. I mean, builders are going to build. And so when we're building our product and our technology, we have a runway that's actually based in USD. We don't hold crypto, not much. And so we've been smart about it. A lot of other teams have been holding, ETH all the way down from 1,400 to 250 or 300. And so they're under price pressure, and these projects are going to run out of money. We famously sold all our crypto very early on as we did the token sale, because we felt we had a plan, a roadmap that was based in USD and a predictable unit of account, essentially. And I think gambling on crypto is something which individual speculators and investors can do. But if you're an operator and you're running a company, you need to make sure you have the runway to deliver what you promise your community that you would.
So that's Vinny Lingham, and on Twitter, some people call him the ultimate counter indicator. Next up, Erik Voorhees. You're the CEO of Shapeshift, and you guys make your money out of the volume of transactions that's traded. Erik, the last time we spoke, you also warned us of an extended bear market and that we should brace ourselves for a long time. Has it been a long time? Can we expect the bear market to end soon?
I don't expect it to end soon, although I think the rate of collapse has slowed considerably. Generally in these bubbles, after you go through several months of downtrend, you kind of hang out in a range for a while, and that while can be a couple months, or after the bubble in 2013, it can be a couple years. But I think we're done with the majority of the collapse.
Erik, when you say that we are done with the majority of the collapse, are we now in what you would call buying territory?
Yeah, I think so. I mean, I'd be surprised if Bitcoin falls more than 30% from here, which might still sound like a lot to some people. But yeah, I think anything in the $5,000 to $8,000 range for Bitcoin is pretty reasonable, and in a couple of years will look like a great spot. It's 70% down off its peak, which ain't bad.
Now, Erik, there are a whole lot of Bitcoin maximalists on Twitter and even right here on the show that claim that this may be the end of the utility token, that all altcoins will die and that only one chain will survive, and that will be the Bitcoin chain. Are you one of those maximalists?
No, not at all. I mean, Bitcoin, the first bubble of Bitcoin I was in, it fell from $31 to $2. So that's like a 98% decline. Now, a lot of the tokens are pretty much worthless anyway, so some of them should just keep going to zero. Most of them are crap. But that, this process of finding, the gold within the chaos is an important one.
So you mentioned that you were a Bitcoin maximalist, but you're not anymore. What is the change of heart?
The change in heart, I think, largely came because I realized that digital assets could fill many different use cases, and cryptocurrency was sort of one early one that was successful, but was not at all the only one. And so you're going to get lots of blockchains and lots of different digital assets for all different kinds of use cases. These different blockchains and assets have trade-offs in their features, which means that some of them are good for certain purposes and not for others. And this idea that Bitcoin, with its specific properties, is going to be optimal for every single use case is really naive, and I think cuts against the very decentralization that we were all trying to build in the first place.
But Erik, you have Bitcoin maximalists walking around with huge smiles on their faces as if they've been vindicated and that the demise of altcoins is just a few days away. Have they just drunk the Kool-Aid?
Well, I'm pretty drunk on the Bitcoin Kool-Aid myself, but I see Bitcoin as one of many assets that is changing how all of finance is going to work. And I don't fall into this tribalism of one true coin and waving that flag to the detriment of all others. I think a lot of people are not actually very secure fundamentally in how they understand Bitcoin. They don't have the confidence in it that I do. And so when they see other assets, it makes them scared, and they want to dismiss them, make fun of them, insult the people that buy them because they think that helps Bitcoin. But I think it's an adolescent behavior and it doesn't help Bitcoin at all.
Shouldn't we be all pushing for one agenda at such an early stage of an ecosystem?
Yeah, well, and a lot of the maximalists forget what the real fight is about. The fight is not about Bitcoin versus Ethereum. The fight is about decentralized finance versus the banking system. And that's what got us so interested in this stuff, 5, 6, 8 years ago. And if people spend all their time just arguing on the internet about which coin is the one true coin, that's not really helping the proper battle. And the proper battle is fiat and banks versus decentralized currencies.
Erik, help me out here because I'm struggling to make sense of something. Last year this time, China had banned Bitcoin. South Korea was banning Bitcoin. We had no idea how we were going to scale Bitcoin and scale Ethereum, and Lightning Network was just a whole lot of talk. And yet then we went into the biggest bull market we've ever seen. Now, all that news is behind us. All the fight is behind us. China has banned Bitcoin, and we all know that. South Korea has adopted a favorable approach. Lightning is being adopted. Ethereum is being scaled. How is it that then we were in a bull run and now we're in a bear market?
The logic is that in the short term, the price is not really very well connected to fundamentals at all. Over the long term, it is, but Bitcoin operates on these speculative cycles where most of the price is due to speculation about future value. And that's fine. As it grows, the portion of its value that is, use case value will grow, but it's still mostly speculative. So, a good way to think about this is if Bitcoin grows to take over the world, then its price will be something way higher than it is today. And let's say that takes 10 or 20 years. If it just steadily moved up toward that price over these years, you'd have an asset that grows by 10% a month in price. How many months do you think something has to grow at 10% per month before people start front running that and buying it early? And so what you get are people buying something well ahead of when that price appreciation would be, and the price appreciation accelerates and turns into a bubble. And then the bubble gets out of control and it pops and falls down for a long time. And that is sort of the natural order of how an ascending asset goes from zero value to, someday probably $1 million per coin or more. It doesn't happen in a straight line. That would be impossible. The bubble is really the only thing that explains it.
Erik, I know you're no fortune teller, but I must ask you, how long do you think this bear market's going to last?
So I don't think it'll fall more than 30% more, at least Bitcoin. I think we should expect 3 to 18 months of sort of stationary price where it's not doing too much. And then I would expect sometime in like mid 2019 or 2020 to have another bubble again. But I also put about 20% confidence in that prediction. I wouldn't be surprised if we hit all-time highs 2 months from now, or if it takes 4 years. You really got to play the long game with this stuff.
Next up, I've got the man who wants to tokenize the whole world, but is not a believer in utility tokens, Anthony Pompliano. Anthony, I know you're not a fan of utility tokens, but do you think that this bear market may be coming to an end?
No, look, I think if you look across, kind of the historical context here, right, with these parabolic runs, we've seen the drawdown, right, 70% or so. We've seen a couple in the past that have been worse, right, into the 80, 85%. But I think what ends up happening is when you get a long drawdown like we've just seen, we'll hit a bottom at some point, and then we'll kind of go sideways for a while. And so, the last one was over 400 days. I think this one's likely to be, quite long. And so we're, very interested to see kind of how this plays out. But I think that's the general direction of where we think this is going to go.
So do you think we're near the bottom, or is there still much more pain to come? And if so, where is the bottom?
Yeah, I unfortunately, I think that we're still going towards the bottom. I think that it's hard to tell where the bottom is going to be. A lot of the people that I've talked with and seen models and, kind of the data that we've done internally, it feels like anywhere between $3,000 to $4,000 could be a bottom. Obviously, for a whole host of reasons, we'd like to see it not be that low. But if it goes down there, I think that we're prepared, to kind of continue to invest capital in that type of environment.
Now, Ant, the question that I asked all the other guys, it's a question which baffles me. Last year, this time, we had all the bad news. China banning crypto, South Korea banning crypto, Bitcoin scaling issues, Ethereum scaling issues, and we went into the biggest bull market of all time. This year, all that is behind us, and now we're in a bear market. How do you explain that?
Yeah, so I think two things. So one is across a number of different industries, we know that when government bans things, sales usually spike, right? People like to get things, or people don't like to be told that they can't do something or they can't buy something. And so I think that's, that plays out across industry. Second of all, is I think what we saw was a huge influx of capital. And a lot of those teams are well capitalized today. They're beginning to lay the groundwork or the infrastructure for kind of the next 5-10 years. And so as you look at the capital inflows, I think that that's a positive sign for the future. But the second thing is around these network effects. And so if you think of how do you value a network, well, the more people that join a network, the more valuable it becomes. And so when price spikes, you get a huge influx of people. When price draws down, you actually see people either stagnate from growth or leave the network. And so what I think ends up having to happen is we're going to have to hit some sort of inflection point again, or some bottom that then kind of reverses. And then as we see more people join that network, you'll see price continue to drive there. And so that network effect, I think, is really important, but often gets overlooked.
Now, speaking of the network effect, it's not only Bitcoin that has a network effect. All the other coins, the altcoins, they also have a network effect. But I've seen on Twitter that you're not very friendly to altcoins and utility tokens. Do you believe that this may be the end of the utility token?
Yeah, so I don't think that you could say it's the end, right? I think that, again, the promise of the technology around this utility token got people really excited. A bunch of capital rushed in. A bunch of people, came into those networks, and they got very kind of drunk with the dream. And so I think what we're seeing now is reality sets in. And again, as we've said all along, the utility tokens, one, are not a great investment for investors. It's not equity. It's not debt. It's not a claim on cash flow. And then two is you still have to build a product. You still have to build the network where you can use those utility tokens. And so there's a couple of teams who have actually gotten to a live product, but many of them have not yet. And so it remains to be seen whether somebody can actually build a product that people want, regardless of whether it's built on blockchain or not. And so until we get to that point, I think that the utility tokens are still kind of in this gray area of, in the long term, maybe, in the short term, unlikely.
And some short answers. Are you buying Bitcoin now?
So as I've said many times with you, I think Bitcoin is a game of accumulation. And if you're always in accumulation mode, that ends up being a pretty good and powerful position to be in.
Okay, would you be investing in any utility tokens or ICOs?
Yeah, so we've never invested in a utility token ICO. I don't think that will change anytime soon. So I'll have to go with no there.
And do you believe that at the end of the whole process, at the end of this blockchain revolution, we'll only have one chain, and that will be the Bitcoin chain?
Look, I think it's hard to have a binary response there. I think that it's more of a probability. And I would say that the probability is quite high, right? So I put it at over 50% likely that the Bitcoin chain ends up incorporating a lot of what these utility tokens are trying to accomplish into that chain. And so then that really turns these altcoins into R&D factories or R&D labs. And so I'd put the probability at over 50%. It's definitely not 100% probability, but it's quite likely.
And if the ETF does eventually get approved, can that turn the bear market back into a bull market?
Yeah, so I'm not convinced really that the ETF is going to have some huge impact. I think that it would be a great, positive step. I think that a lot of retail investors will be able to enter the market that maybe otherwise haven't yet. But I don't think that it's going to have kind of this huge inflection point that's going to drive, going from $6,500 to $30,000, $40,000 price point in some short period of time. And so do I want it to happen? I think it would be great for it to occur, but I don't think it's going to have quite the meteoric rise to price that many people are speculating on.
Tone Vays, from your suite in Las Vegas, I've purposely kept you for last. Tone, the last time we spoke, you were a big Bitcoin bear. In fact, you said that Bitcoin was going to go down to 3,000 US dollars. At the time, I thought you must be high on drugs, but today I actually think I want some of those drugs. Do you still think we're headed towards 3,000 US dollars?
Yeah, so $3,000 was like my middle point. Around mid to late January, I basically became a proponent of this bear market, and my most optimistic target was $5,000. My most pessimistic target was $1,300. My most optimistic time end to the bear market was late October, early November. My most pessimistic time period end of the bear market was going to be like August of next year. So I'm actually still waiting for my 4,975 or 5,000 to round off number. It keeps trying to get there, but then it keeps bouncing back because shorts get over leveraged and they get squeezed. So I'm still looking for that $5,000 number. We are probably going lower, but I'm trying not to make too many lower targets until we hit my 5,000. So that's my current target, but we're probably going to go lower than 5,000 as well.
Tone, the big question that I've asked everyone else. Last year, this time, we had all the FUD. China ban, South Korea ban, no scaling, etc., etc. This year, that's all behind us. The FUD is gone, and now we're in a bear market. How do you make sense of that?
Because like 80 to 90% of the valuation of Bitcoin is still speculators. And when speculators get scared because prices are going down, they overshoot to the downside. Just like we overshot to the upside. Last year, I was pretty adamant that I expected 7,500 in November to be the ultimate high for the year. Now, clearly, you can say I was wrong by a lot because we went all the way to 20K. But in reality, I was only off by 3 weeks. It's just that in those 3 weeks, the price went up a lot. Now, I was a bear when Bitcoin hit 7,500, reversed, and I was looking for my 5,000 number to get hit then and probably lower going into year end. It was hard for me to time the bottom because we reversed at 5,400, didn't quite make it to my 55. But once we got back to that 75 area, I once again became a bull with absolutely no idea where we were going to top. But what I knew at that time was that we were going to come back to 5,000. It didn't matter to me. In late November, early December, when we were flying up above 7,500, the market could have gone to 100K going into January, and I still would have said we're going back to 5K. The market needs to retest prior significant highs. The 5,000 was never retested, and even the 1,300, the $1,200, $1,300 area from 2013 was never retested, and that $1,300 area continues to worry me to this day.
Now, Tone, I know you're going to love the next few questions. Tone, Bitmain announced in its IPO pack that it's holding a significant amount of Bitcoin Cash. In fact, it's holding over 5% of the Bitcoin Cash in circulation. Does that pose a risk? What are the implications of this?
I mean, it's a huge risk for Bcash. It's not. It's only a positive for Bitcoin. It's actually great that they are going public, because now, because they're going public, they have to open up their books. They have to be very transparent about everything they do. And this is how we know how much Bcash they're actually holding. And they're holding a significant amount. This shows you that Bitcoin remains as the most decentralized cryptocurrency, not only from a miner perspective, also from a coding perspective, and certainly from a perspective of who holds Bitcoin. There's this giant concentration. It's a huge systemic risk for Bcash, because Bitmain can sell that position at any time, and it also potentially shows incompetency in Bitmain and could hurt their stock if the people around the world see that they are holding a huge position that they're counting as an asset that the majority of the people know is just an incompetent technological project. So I think this hurts Bitmain in multiple ways, and it looks very bad for Bcash. It shows how centralized it is from every perspective.
You may not believe it, but it's actually not all about Bitcoin. There are a whole lot of other cryptocurrencies out there. In fact, about another 1,800 cryptocurrencies out there. Now, whereas Bitcoin is down 60%, some of the alts are down 95%. Do you think this could be the end of the utility token and the altcoin market?
I hope it is, but I don't think I'll be that lucky. It depends. Like, if Bitcoin continues this really big bear market, it could really be the end. I mean, people are starting to get wiped out. I have so many friends of mine that didn't listen to me and were making big money, trading on these altcoins, trading on these ICOs, buying them in. And I talked to them in private, and they're all like, yeah, I'm stuck in this position. I'm stuck with all these ICOs and all these altcoins. I'm now down so much, I might as well wait. And this is the kind of mentality that you usually get from people that don't recognize they should have gotten out. So I really hope this is the end of the altcoin market, but I don't know. It's really hard to say where the end is. We can certainly have one more pop, but it would be nice. I also think that it's possible that Bitcoin could get stuck in this, bear market, going into the halving, maybe going into 2020, because all of this needs to purge. People always say how I compare this to 2014 bear market, which fell from 1,200 all the way to $150, and everybody keeps telling me, well, this isn't the same thing. The fundamentals are much better now. Everything is much better now. But my answer to them is, back in 2014, everyone was a Bitcoin maximalist. You asked an average crypto person in 2014, and he'll tell you Bitcoin. Very few people were altcoiners back then. Today, the majority of the people in crypto are altcoiners. I think the fundamentals of Bitcoin are not as great as they were back then, because everyone is divided. And I think when all of those altcoins completely decimate, people will realize that it has always been Bitcoin, and maybe people will be united again behind one cryptocurrency that they're introducing to their friends and family.
Tone, the blockchain is a technology which has the potential to disrupt every single industry in the world. It could be the biggest revolution of our generation. Yet, as a Bitcoin maximalist, you believe that all the other chains will die and that only Bitcoin will survive. Wouldn't it be a tragedy if after this whole revolution, only one chain survived, and that was the Bitcoin chain?
I don't think so. I think all of those other blockchains are just insecure. What I think would be a tragedy is people believing that Ethereum is A, immutable, and B, technologically scalable. And if you start building out your businesses, and these businesses are critical to the economy of your country, and the insecurity of Ethereum causes a major implosion in Ethereum, it would actually end a lot worse than if you just went with a centralized solution. I think the Bitcoin blockchain is the only one that can be considered secure, sustainable, and scalable. And even that is not guaranteed. And with something like Ethereum or any other blockchain, it's just too risky to put anything of substance on it because it may actually disappear. Even Bitcoin itself is still, I believe Bitcoin is going to survive into the future, but and people need a little more confidence on that. I just think it's dangerous to use any of those other ones. We only have one internet today, and I'm only expecting one public blockchain into the future, just the way the internet is. I mean, Amazon is not an innovation. Amazon is just mail order catalogs utilizing the latest technology of the internet. I think whichever companies find a way to utilize the Bitcoin blockchain, those companies are going to succeed. I don't believe in this. You have to decentralize everything. Yeah, I need my own currency. It's almost like saying I need my own language, and people have to speak my language in order to do business with me. I find that a little bit ridiculous. And it's possible that the only revolution here is just government censorship-resistant value transfer and just new money for the world to use to opt out of their government system. And that is an amazing innovation. And that might be what changes the world. And I think that is what people should focus on, not thinking ahead and pretend and using it for something that it doesn't actually do well.
You can always count on Tone to be a Bitcoin maximalist and to get a Bitcoin maximalist view. Now, speaking of Bitcoin maximalists, there's a new book taking the crypto world by storm. The book is written by a crypto maximalist and is called The Bitcoin Standard. The author is Saifedean Ammous, and I have him on the line from Beirut. Saifedean, I must admit, I was hoping to have a copy of your book by the time we spoke, but it seems that Amazon is still trying to work out where Johannesburg is on the map. In a nutshell, what is the book about and what's all the hype about?
Well, thank you for having me, Ran. My book discusses Bitcoin as a technology for performing the functions of money. And it argues that it might be the most advanced form of money that we've ever invented. And that's because it is the hardest money that we've ever invented. So my book discusses in its first few chapters, talk about the hardness of money and the difference between easy money and hard money. And that is the fact that easy money is easy for people to make more of in terms of the quantity of it, whereas hard money is hard for people to make more of. And so the quintessential hard money historically was gold. And so what I show in my book is, I make the case for why this is important, why hardness versus easiness of money is important. And then I discuss how that relates to Bitcoin, because Bitcoin, if it continues to work successfully, and it has been around for almost 10 years now, it continues to be there for another 10, 20, 50 years, it's reliably performing the function of money for many people. And also its supply is quite strictly adhering to its credible monetary policy, which says the number that is going to be produced is preset effectively. And so no matter how many people want to make more Bitcoin, it's hard for anybody to make more Bitcoin. So Bitcoin is the first asset that we have that's strictly scarce. There's never going to be more than 21 million Bitcoins out there. Whereas if you think of any other kind of liquid asset, it's always possible for people to make more of it. And if people use it as money, that brings its value up. That gives a huge incentive for others to make more of it, but that then brings the value down, which makes it lousy money. So Bitcoin, in that regard, is the hardest money that we've ever invented. And so my book discusses the consequences and implications of that.
Okay, now let's talk about the hardness of money and the concept of hard money. Are you saying that what gives money its value is how hard it is to create it, and that money gets ruined when governments issue more money or create more money too easily?
Pretty much, although this doesn't just apply to government money. So if you look across government monies, and I make this comparison in my book, you find that, the more stable currencies and the more credible currencies that people from around the world will resort to have had relatively lower supply growth rate. They're harder than the countries whose money supply continues to increase at fast rate. Therefore, their money is easy and it loses value much more. So you see that relationship across government monies, but you also see it with other kinds of money. For instance, why did copper and silver eventually lose their monetary role, or iron before that, or seashells, or any other kind of rock or whatever that was a primitive form of money? With industrialization, these things became very easy to produce in growing quantity, and they were useless as money after a while because people would then resort to the harder money.
So what you're saying is that in order for something to have value, it must be very hard to create and very scarce. Now, you mentioned gold, and you said that gold backs money. I was under the impression that when we dropped the gold standard, we effectively stopped backing money with gold. Is that the case?
Effectively, yes. I mean, not in the sense of the way in which it was functioning under the gold standard, in which you could redeem your paper money for gold. You obviously can't do that now. However, central banks around the world today hold far more gold than they did under the era of the gold standard. Under the era of the gold standard, the gold was distributed amongst banks and individual institutions as people were dealing with physical gold and papers backing the physical gold. But today, the gold is concentrated in central banks. So central banks still have a lot of gold, which still plays a monetary role, as we can see. And also around the world, people still use gold as a store of value, as a long-term store of value. And, that all points to the fact that the gold has not really been demonetized. And, any central bank that has issued a currency is backing that currency either by gold or has gold reserves or has paper money that is from a central bank that has gold reserves.
So there is gold in the central bank, but you can't redeem money for gold. So it's just there for security. Yes,
essentially it's, I think it would be much harder for these governmental currencies to maintain their monetary role if there was a true free market in gold. So central banks maintaining gold, I think, is a very wise move for them to maintain the value of their currencies.
Okay, now you spoke of hard money versus soft money, and you spoke about Bitcoin and what you refer to as shitcoins. So I'm going to leverage your term. Are you saying that when you look at hard money versus soft money, Bitcoin is hard to produce and therefore has value, and the other coins, the shitcoins, well, they have no value?
Pretty much, yeah. I don't think any of the other tokens need to exist. I haven't seen any compelling reason for any of them. And I've been around for a while. I've seen many come and go, and I've given a lot of time and effort towards researching them. But I think the reality is that we're dealing here with a protocol. It's a protocol for the transfer of value on the internet, and Bitcoin does that job. And so this is by nature a winner-take-all market. And so in a free market in money, before governments stopped the free market of money in the 19th century, we saw that the outcome was that gold emerged as the global money all over the world. And people who held on to silver towards the end of the 19th century eventually had to switch towards the gold standard. So in the 20th century, we moved away from gold because government ended a free market in money. But I think in a free market in money, which is likely what is likely to happen on the internet, because the internet is far harder to control than physical banks. And so in a free market competition, people are always going to go towards the most liquid. But the case for Bitcoin's success is far deeper than just that. The reason I think Bitcoin is it's all or nothing. It's really only Bitcoin or none of the others. It's because Bitcoin is the only one that can even make the claim towards being immutable and towards being controlled by its software and towards having a credibly consistent monetary policy. None of the other coins can possibly claim that they have a controlled inflation schedule and that they can stick to it, because any of the other coins is quite trivial for people behind them to fork them or to change their properties, because none of the other coins has really emerged in an organic way on the market like Bitcoin did, which is a protocol that was left there by the person who produced it and left it on its own, and effectively it grew in the wilds of the internet. So Bitcoin is the only one, and we saw this last year when many of the Bitcoin businesses and influential leaders tried to get Bitcoin to hard fork to change one tiny little property, which is the block size. They failed miserably at it. And so if you can't change the block size, you're going to have a much harder time changing the inflation supply for Bitcoin.
Safedin, let me slow you down here for a second. If you believe that the blockchain is the single biggest revolution of our time, bigger than the internet,
even bigger
I don't. I believe Bitcoin is the important thing. Blockchain is just a technical term for something that happens under the hood in Bitcoin. It's not an interesting term, and blockchain is not useful for anything else. It's just a useful way to make Bitcoin. That's it.
So do you think that we'll write all these smart contracts, the ones that we're writing in Ethereum, the ones that promise to change the whole world, that we'll be writing these into the Bitcoin blockchain?
I hope not, because I looked at everything that Ethereum is doing, and none of it has really generated a single dime of revenue. The idea that there's any business case there, I think, is extremely dubious. It's been 5 years now of press releases and partnerships and a lot of hype, but still, we don't really have anything that Ethereum does that is unique that Bitcoin can't do. The only kinds of smart contracts that we've seen that are important are things like multi-sig payments, and we see these can be done on Bitcoin, and they can't be done on Ethereum and many of the other altcoins. So the notion that this blockchain technology is a massive toolkit that's going to be applied to all of the problems of life, I think is just a misunderstanding. It's got one job only. It makes Bitcoin work. It's just a way for Bitcoin to function, and that's it. It's not useful for anything else.
So is this bear market the end of altcoins and the rise of the king, which is Bitcoin?
No, I've written off altcoins many times before, so I've learned not to tempt fate. But I could hope that I personally I would like to see it happen, because I would like to see fewer new people come into these things, which I think they work out for the people who start early, and they work out for the people who are promoting them and actively selling them. But I think they're not very good for the average person who doesn't know what's going on, and they distract from Bitcoin. But they are also a roundabout way of getting to Bitcoin, understanding Bitcoin. So I think it would be good if we had fewer or no altcoins, because people then would be building on Bitcoin, which I think would be far more important. But I think they're going to be around us for a while, because people will just always want this temptation of investing in the next Bitcoin. It's always going to be there, and there will always be new generations of people who refuse to learn the predecessor's history.
So I guess if it's all about Bitcoin, then we should look at the Bitcoin chart to see where the markets are going. With me, I've got one of the biggest chartists on crypto Twitter, but he's asked to remain anonymous. Cryptodog, what am I looking at here?
Sure. So we have the one-day Bitcoin chart kind of viewing the past year's worth of activity. And so I kind of have two ideas here about this whole bear market, because I'm sure that's what you want to know. Is the bear market over? So in this case, I believe that it might not be over, and it very well could go ahead and drop again to this price point right here at the $5,000 level. This was a very key level where China banned Bitcoin last year, and we saw a massive drop down to about $3,000. Not much Bitcoin has ever been bought or sold for this level, and it is natural for the markets to want to go down and test to see if there's the ample support there that we expect. That being said, the current low here could very well hold, and the bear market could be over. Now, we won't have any confirmation of that in my eyes until we see three average crossovers. And here I have the 50, 100, and 200 EMA moving averages. So if we take a look at the last bear market and zoom in here, we can see, yes, we had this long drawn-out drop, and at no point in time did these three moving averages completely cross over until we saw this massive breakout. And to me, that is the sign of a new bull market. Now, as I'd mentioned, we have this gap at 5,000. I kind of liken this level of 120 to 135 as similar to that level.
Okay, so slow down. What are we looking at in the graph?
So here we are looking at the price of Bitcoin from 2014, 2015, and into 2016.
And what you're saying is that the three lines crossed over each other at the end of 2015.
Yes, sir. A little bit in the later end of October 2015, we see this nice, beautiful crossover.
Okay, and what are those lines?
So they are moving averages where they take the last 26, I believe, days into account and smooth it out to have a nice moving line of the previous prices. So as the price action develops, we see this lagging line come behind it.
So what you're saying is that when the moving average lines cross over each other, either in a bull market or in a bear market, that's a sign for you.
Definitely. Now, of course, that isn't the be-all, end-all, but in a nice trending market, you see the faster moving averages always trailing above the slower moving averages.
Okay, so let's go back to today's chart. Where are we today?
We're still firmly at this point in a bear market according to trailing indicators. So that doesn't mean that today can't be the first day of the new bull market, but we just don't know.
So what would give you confirmation that we're moving into a bull market?
So personally, again, I'd like to see these lines cross over in a bullish trend, and then I'd like to see the price action maintain above the lines as we see back here for at least a few months.
So what you're saying is that if we look at the charts, we're not quite out of the woods yet.
I'd say that's a strong possibility, but it isn't necessary in the cards. We certainly could reverse here. We just won't know that was it. We are now out of the woods until further on down the line and we have that confirmation.
A few months ago, I went onto CNBC Fast Money and I called a hard sell on the XRP token. At the time, I believed that the token had no scarcity and no real utility.
And Ripple, hodl or fodl?
Ripple, I'm throwing in the garbage.
In the garbage?
Yeah.
You can't even say hodl. You're saying in the garbage. We need a new animation.
Fodl.
Why in the garbage?
Because I've been researching the Ripple token, the XRP token, for a long time. Let me just make a differentiation. Ripple, the company, one of the best companies I know. XRP, the token, I still can't work out what it's used for.
Okay, wait. So, because a lot of people say you can't have the platform without the coin, and the coin is a statement as to how good the technology is. But you're saying that there's actually a difference.
So Ripple, the company, does the banking systems. It replaces SWIFT with bank-to-bank money transfers, primarily international money transfers. You don't need the XRP token to do that. So as far as I know, I can't find a use case for the token. So I'm out. My call caused chaos on Twitter. And I made a commitment to the crypto community that I'd do more research to find out what the use case of the XRP token is. So I flew 33 hours to the Ripple office in San Francisco and met the head of product, Ashish Burla. Ashish, we met earlier this year at the Ripple offices in San Francisco, and we had a great discussion about Ripple and the XRP token. Let's fill our viewers in on that discussion and settle the debate once and for all, and clarify the controversy around the XRP token and the Ripple company. So Ashish, let's start off with the question around the relationship between Ripple and the XRP token. What is the relationship?
Yeah, so Ripple, I'm an employee of Ripple. I've been at Ripple for 5 years. It's a for-profit company. We build enterprise software grade products for financial institutions around the world. XRP is a digital asset. Ripple Inc. holds a good amount of the digital asset, but they are different, sets of things. One is a company and we sell software products, and the other is, XRP, the digital asset, is an open distributed ledger system that anyone can use, and it's decentralized. And Ripple Inc. is one of the developers on the XRP ledger. But as we talked about when you came into Ripple, there are other folks that we're really excited about that are building big businesses on top of the XRP ledger. Coil, for example, and we launched Spring, which is a venture to foster the XRP ecosystem. And so we're really excited about all the activity around the XRP ledger.
Now, are any of the founders of the XRP ledger connected or associated with Ripple in any way?
So David Schwartz is our CTO, newly announced CTO. He's just been a very, very good person to work with for me. He's been my mentor at Ripple, knows so much about decentralization and distributed systems, but he also is fundamental in architecting not only Ripple products, but also the original XRP ledger.
Now, some of the criticism around XRP is that the ledger may be centralized, and that as a result of this, XRP may in fact be deemed a security. How many validators are there, and how many are controlled directly or indirectly by the Ripple company?
Yeah, so again, like the difference, Ripple Inc., the for-profit institution, we make software that we sell to financial institutions. And I think some of the FUD that you're talking about is around the XRP ledger. And, it's decentralized. We have a whole plan about further decentralizing the XRP ledger. We aren't a mining system like Bitcoin. We have validators that different people around the world are running that validate transactions, on the ledger. And if it went away, the XRP Ledger would still flourish. It would still continue on. It would still be open for folks to develop and build big businesses on.
Are there any other groups that hold multiple validator nodes?
Yeah, so Ripple Inc. does run some validators. We have a blog, architecting our plan towards further decentralizing that. I believe that there's about 10 of the validators that I think there's 100 some out there now, but 10 are run by Ripple Inc.
Okay, Ashish, let's move the conversation to the use case of the XRP token. And I think to do that, we need to talk about the products that Ripple is building for the banking system and how the token relates to those products. Tell us about those products and how the token is used.
Yeah, so again, Ripple is like one company building on top of the XRP Ledger. There's other ones that have different use cases, but the one use case that we really felt passionate about, and again, we've been around for a long time, since 2012. We realized that payments, and specifically cross-border payments, had the most friction, out there. And so what we started building was, a set of products. The first one that we introduced was XCurrent, that connected financial institutions around the world and helped them communicate, helped them send, compliant information so they can comply with local regulations. And that product is doing really well in the market now. We're selling over 2 of those, products per week, and so that is the first product.
Ashish, before we talk about the second product, I want to make sure that I understand the current XCurrent product. What you're saying is that the XCurrent product that currently exists is a product that simply allows the banks to communicate with one another, and it's not a transactive product.
That's the main purpose of XCurrent, but it did help transfer value for fiat currencies. That means non-cryptocurrencies. And so if you wanted to trade US dollars for Indian rupees, you could do that, but it wouldn't necessarily natively involve a digital asset like XRP.
Okay, so fast forward to the second product.
So the second product I've been extremely passionate about building. I think a lot of it was timing. The crypto markets, the exchanges are now out there. There's over 200 of them out there. And so it's time that we can start solving a big problem, which is liquidity. So how do you make value transfer, as you put it, easy? So I can move money into Mexico in seconds without having a bank account in Mexico, without having pesos sitting there. And that's really how you move money today. You open a bank account and you have the local currency sitting there. So we developed a product called Xrp, and we really nailed the experience. And so the experience is that you send the system US dollars, for example, if that's where you're originating from, and it converts to XRP, moves the XRP into Mexico, and then a local exchange in Mexico would convert that to Mexican pesos and pay out. That whole process takes just a matter of seconds, versus like the days that it takes today and the amount of friction needed to, opening up accounts in new countries, having pesos and so forth. So really excited about Xrp.
So let's talk about the way banks used to do this before Xrp. If I understand correctly, the banks used a traditional SWIFT system that was created many years ago. How does this work?
So, SWIFT was built in the 1960s when global commerce didn't exist. I mean, there weren't Ubers and Amazon sending, millions of payments per day. The way that the SWIFT system works is essentially you drop FTP files into a server, and they get uploaded and batched every night. And they don't do anything with value transfer. That's just the communication. So guess what? If you have an error, it takes days to resolve, an error using the SWIFT system. It's archaic. I mean, it's not built for today's modern e-commerce, companies that need to send millions of payments to drivers, to merchants around the world. And that's really like the traditional way of moving money. The second thing is that SWIFT just does the communication. You have to open up bank accounts around the world and deposit local currencies to pay out. So that's the second part. So the first part, as you put it, majority of that is solved by the XCurrent product. The liquidity part, no longer do you have to have bank accounts and local currencies around the world. That is solved by the Xrp product that we're really excited about here at Ripple.
Now, Ashish, I'm going to play devil's advocate here. In the Xrp system, why do we need the XRP token and not just use USD, Fiat, or even just Bitcoin?
Oh yeah, so that's a good question. So you could use U.S. dollars, but you would have to wire U.S. dollars into Mexico, then find someone else to convert that into the local currency. That is really problematic. That means essentially, you're just building the same system that exists today. And Bitcoin, Bitcoin is great for a lot of use cases, especially store of value. But our customers didn't want to wait hours for the Bitcoin to settle. During high traffic times, Bitcoin fees are exorbitant. So now if you're talking about sending just a couple of $100 and you had to pay Bitcoin fees of $20, I mean, that's sort of really similar to the system that is already built today. And so XRP being fast, moving in seconds was a great sort of solution to use for the Xrp product. And you can move that. I mean, the great thing about XRP is that you can move that around the world. It's counterparty free, decentralized, and that moves in seconds. And that's just a great experience to build, the Xrp product around.
Now, when you say market makers, these are people like me and you. It can be anyone who is willing to buy and sell XRP in their local currencies around the world, right?
That's right. So anyone can be a liquidity provider. You put trades on different exchanges around the world. We just announced one in the United States called Bittrex. Another one in Mexico called Bitso. And institutions can be market makers, banks can be market makers, or individuals can be market makers. And that's like the beauty of like this whole ecosystem, is that it's really democratizing who can provide liquidity and these kinds of services to corporations and people around the world.
Now, doesn't that create an additional trading fee? I mean, I'm buying XRP on an exchange, then I'm selling it on an exchange again for pesos. I'm paying double trading fees, and I'm paying multiple spreads.
Well, if you look at what's happening today, our customers are paying exorbitant exchange fees today. Sometimes 200 to 300 basis points above market. They're paying SWIFT fees, they're paying wire fees, and so there are some additional fees that that are being levied when you use exchanges around the world. But those are so small compared to the traditional legacy fees. And so, our customers are seeing, savings of 40 to 70% over, traditional systems. Also, keep in mind that the legacy system that's built today was built for trading billions of dollars or millions of dollars and sending those cross borders. The beauty of this system is that it's economically feasible to even send $100 now. So if I'm an e-commerce company that needs to, pay out a driver or a merchant, and I want to pay out, $100, I'm going to make that possible using, Ripple products and Xrp.
Okay, so now the big question around scarcity. What creates the scarcity of the token in the system, and what would cause the token to go up? I mean, in order to move the money, I buy XRP using my USD, sell it very quickly when I convert it to pesos, and in that example, there's a very short holding period and very little friction in the system. So what causes the scarcity?
Well, we're focused on the experience with Xrp. To send $1 million using Xrp, someone needs to hold $1 million worth of XRP. And so that is just how the system works. They put those orders, they're funded orders on order books, using exchanges around the world, but it doesn't work unless there's the liquidity available. And that's what creates demand for XRP, the digital asset. So again, if you want to move, $100 billion a day, you would need $100 billion of XRP held by liquidity providers and traders at the exchanges around the world, and essentially that's how the system works.
So if I'm a bank and I need to move or buy $100 billion, I buy $100 billion of XRP, creating a huge demand, move it across the border, and then I need to sell $100 billion of XRP, causing a massive price movement down. Wouldn't this create huge volatility?
No, because at the end of the day, all these orders have to be funded orders on these different exchanges. And in your example, it would be the case where you're only sending that, and that's the only payment that you're going to make cross borders. But in reality, we want institutions sending payments, every second across Xrp. And if you're going to have, a good stream of payments across Xrp and other Ripple products, you have an even sort of order book and liquidity across the world. And so it's not like it's one payment a day. It's we're working towards folks that want to send millions and millions of payments per day, and that's what like a lot of these e-commerce companies are doing. They're sending millions of payments cross border to different destinations around the world per day.
Are we not creating an extra layer of volatility in a forex market that already has a lot of volatilities? And do the banks actually have the appetite for this extra risk?
Rand, that's a really good question. And so, we asked our customers, using Xrp, the volatility that our end customers are using, the Xrp end customers are using, is only a few seconds. And so we asked them, a few seconds of XRP liquidity, how do you feel about that? And overwhelmingly, they said, listen, I will take a few seconds of XRP volatility versus holding Mexican pesos for weeks or months like I have to. Because the volatility of a few seconds of XRP versus the volatility of a week of holding a local currency is a huge difference. They'll take the seconds in XRP any day.
Ashish, we are running out of time, but I do want to tackle one last issue with you. The XRP ledger is primarily used by Ripple. Are there any other developments on the XRP ledger? Is there an ecosystem? Is this a real open source ledger?
Yeah, and so this is something that I'm really passionate about, and we're really excited about, and that's why we launched Spring. Spring is really an effort to build out the developer ecosystem on top of the XRP ledger. There's a lot of interest in companies developing on top of the XRP ledger. Coil is one that I'm super excited about. They're really going after the micropayment use case for content publishers around the world, and they're using the XRP ledger as a system to build their business on. And I think that a lot of this is timing. And I think when we started in 2012 and 13, I think that was a little bit too early. We had a developer ecosystem going at that time, a little bit too early. Now the infrastructure is there. Now people can get liquidity in and out of these digital assets with the 200 some exchanges around the world. The time is now to start building out the developer ecosystem. So we're really excited about Spring, and also we're really excited about Coil. Two initiatives to spurt growth for the developer ecosystem on top of the XRP ledger.
So, after speaking to Ashish for 20 minutes, we're all out of time for this week's edition of Crypto Trader. It's been a jam-packed show. Next week, I'll be coming to you from the tech hub that is Tel Aviv. Until then, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.